Good morning and welcome to the Capital Limited Annual General Meeting proceedings. Throughout this recorded presentation, attendees will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question submitted today. However, the company will review all questions submitted and publish responses where appropriate to do so on the Investor Meet Company platform. I'd now like to hand you over to Jamie Boyden. Chairman, good morning, Jamie.
Good morning. Thank you very much and welcome everyone to Capital Limited's 2021 Annual General Meeting. I'd like to just welcome also a number of the directors that have joined us on today's call, including David Avery, who is the Chairman of the Audit Committee and our Senior Independent Director based in South Africa, Michael Rawlinson, who chairs our REMCO committee based in London, Cassie Boggs, who's recently joined the company as the chair of our sustainability committee, and she's dialing in from Denver, so thank you for that with your time zone. Apologies from our other directors who are currently in either prohibitive time zones or sitting on aeroplanes. What I'll do is follow the format as per the last couple of years, just a brief overview of the company and our most recent trading update for the first quarter, and then I'll hand over to our company secretary, Catherine Apthorpe, and she'll handle the procedural matters for the meeting. So, kicking off, the Snapshot of Capital. Again, most shareholders will be familiar with this. A wide geographic footprint across the African continent. We, at the end of March, had 110 rigs in our fleet, making us the largest drilling contractor on the continent. 35 pieces of heavy mining equipment, which is a new business initiative for us, employing just under 2,300 people with a very high quality roster of blue chip mining customers. And I should point out that we also have operations with our laboratory business that aren't reflected in this map, which cover operations in the Americas and Canada. The four pillars to the business, I think, is a critical point to discuss. Obviously, the drilling business is the bedrock of the company, established back in 2005. But what we're particularly pleased about in 2021 was the growth in our non-drilling revenue or non-drilling activities. And as you can see on that chart on the bottom right, the blue line represents the growth in our non-drilling revenues, which is growing extremely strongly, propelled by activities in our laboratory business that we started in about 2018 and our mining business that commenced in 2019. Now both those businesses have got significant momentum. And as I sit here today, we're presenting a very different business than we were a couple of years ago, in that we've got a much broader distribution of revenue and services offerings available to our customers, and the cross-selling opportunities that has presented us have really propelled very strong growth. That was obviously reflected in the results, where we saw 68% revenue growth in 2021. So look, very pleasing. And obviously the fourth pillar of the business is the investment activities, which, as we stated when we released our full year results back in March, propelled us to record earnings in the 2021 calendar year. The strategy has remained broadly consistent, albeit with the addition, clearly, of these other services, but we are driving to deliver an end-to-end exploration to mining services solution to our customers, predominantly across the African continent. We focus on activities at mine sites, and over the last number of years, and including currently, majority of our revenues are derived from activities at mine sites, about the 90% mark. The model, therefore, is to embed ourselves with our clients' operations at mine sites and build extensive infrastructure and leverage the various services through that infrastructure. The model has proven to be very successful, and we're continuing to look to implement that in the years ahead. Looking at the most recent data that we provided the market, it was the Q1 2022 trading update. We reported revenue of 66.9 million. That was a 52% increase on the first quarter of last year. As I said earlier, the majority of that revenue derived from services provided at the mine sites. The non-drilling revenue continued to grow, and in fact, it was 28% of our revenue in the first quarter. So we've continued that increasing trend. We had a slight dip in ARPOR, which was really attributable to rig movements and a higher proportion of underground revenue in the quarter. But rig utilisation, and this is a key factor, running at 82%, we really are operating in an incredibly strong demand environment at the moment, and a very active tendering market. We declared with the results, with the full year results, a final dividend of 2.4 cents for the 2021 financial year, and that is actually payable on the 10th of May. I might just use this opportunity. We've received 2 questions that have come in on the Investor Meet platform, so I'll just use this opportunity to tackle those questions now. The first one was looking at an explanation as to why the ARPOR was lower in Q1 than we've seen recently. So what I would say there is that the ARPOR for the company over the preceding couple of years has broadly moved in a range of about $170,000 to $180,000 per month per rig. So we really were sitting within that band. The reason I wanted to address this question is because I think there is a perception that perhaps the ARPOR is a measure of drill rates only. And certainly drilling rates are on the increase and are a factor in ARPOR, but there are other contributing factors as well. Specifically, if a rig is single shifting or double shifting, that is going to have an impact on how much revenue the rig will generate during the month. If a rig starts operating halfway through a month, if a new contract is starting, that will have an impact on ARPOR. And that is certainly what you tend to see in the first quarter of the year. As people come back from the Christmas break, you tend to see the new contracts commencing again for the year ahead. So ARPOR continues to trade in the band. We are still operating in a very strong demand environment and a positive rate environment. The second question that we fielded is, in the event of a major slowdown in the cycle, where could you bring CapEx down to? Look, I've often said this in presentations that the biggest lever that a business like ours has is the CapEx lever. So if I step all the way back to 2012, heading into 2013, on a significantly smaller business than we're dealing with at the moment, but we saw our CapEx move from about $30 million in 2012 to less than $10 million in 2013. Because obviously if there's no demand for new growth CapEx in the event of a downturn, then you're really just looking at sustaining CapEx. And what that period led to was a rapid de-gearing of our balance sheet. In fact, by 2014, we were debt-free and we commenced paying dividends. So certainly remains a lever to manage the business. I should also stress, however, and this will take us into the outlook and guidance, is that we're in a very strong demand environment at the moment. So we're certainly not expecting to see a slowdown in the cycle. We saw an increase in utilisation and tendering activity about 12 months ago, and that has continued to flow through to demand in across all of our business units in the current year. So in terms of the outlook statement, we still are operating in an environment with gold price, our principal commodity exposure, trading at near record highs. But also as the last 18 months has evolved, we've increased our exposure to other metals, such as copper in Saudi Arabia, lithium in Mali, nickel in Tanzania, and all these metal markets are obviously undergoing very strong demand and pricing scenarios. So certainly bodes well for where we are in the cycle. But the key thing that we've raised many times is taking a look at the exploration cycle, exploration spend, and the CapEx cycle. And both of those measures are still trading at levels that are 40-odd% below the previous decade highs. So certainly we think we're still quite new in the cycle and see significant upside moving forward. Our revenue guidance for this year, we stated it with the full year results, 270 to 280 million. We are expecting to grow the drill rig fleet from about 109 up to about 120 at the end of this year. We finished Q1 at 110 rigs, and we're commissioning another 5 in the current quarter. The load and haul business, dominated by the Sakari contracts, continuing to perform very well at full run rates. We've recently beefed up our management team within the mining business, hiring some very experienced people with extensive African experience, and tendering opportunities continue to develop. And our laboratories business is going from strength to strength. We're expecting, nearing 100% odd revenue growth this year. We've got obviously the Chrysos units being rolled out, one in Canada, and another one is just the one that we've previously flagged for Marilla in Mali. That's actually just arriving in country shortly. And then obviously with the most recent results, we announced a letter of intent to deploy another Chrysos unit at the Kibali gold mine in the DRC with Barrick Gold. So at this stage, guidance remains as previously provided, but the outlook very strong moving forward. So at this point, I'll hand over to Catherine for the procedural part of the meeting, please.
Thanks very much, Jamie. Morning, everyone. Now turning to the formal business of the meeting. Since all members have received the notice of AGM, I suggest the notice be taken as read. We've received votes totaling 130,215,866 shares, representing 68% of those total shares issued with voting rights, being 190,891,187. I now formally propose that each of the 13 resolutions set out and explained in the notice is put to the meeting. I don't intend to propose each resolution in turn. Resolutions 12 and 13 are special resolutions which require 75% or more of the votes for the motion to be carried. All other resolutions are ordinary resolutions and will be passed if more than 50% of the votes cast are in favour. For the purposes of such counts, abstentions are not included. Under Bylaw 22.3, for the resolutions to be voted today, we're proceeding with a count of votes received, counted by our independent scrutineers, Computershare. I confirm the voting results on the following resolutions as follows. Resolution 1. Based on the votes received, there are 130,022,803 votes in favour, representing 100% of present and voting shares. None against. 193,063 withheld. Resolution 2. Based on the votes received, there are 104,952,236 votes in favour, representing 81.55% of present and voting shares. 23,743,630 against. 1,520,000 withheld. The board notes that 18.45% of votes cast were against the remuneration report. The Remuneration Committee consulted with its major shareholders in respect of the changes made to remuneration in early 2022. The package of changes is aimed at ensuring that the Executive Director's remuneration arrangements effectively serve the best interests of the company and its shareholders. The board will continue to engage with shareholders and continue to take account of shareholder views in taking decisions on executive remuneration. Resolution 3. Based on the votes received, there are 99,153,585 votes in favour, representing 88.44% of present and voting shares. 12,954,347 against. 18,107,934 withheld. Resolution 4. Based on the votes received, there are 120,227,741 votes in favour, representing 96.48% of present and voting shares. 4,387,092 against. 5,601,033 withheld. Resolution 5. Based on the votes received, there are 127,406,290 votes in favour, representing 97.86% of present and voting shares. 2,789,576 against. 20,000 withheld. Resolution 6. Based on the votes received, there are 119,733,567 votes in favour, representing 97.37% of present and voting shares, 3,234,755 against, 7,247,554 withheld. Resolution 7. Based on the votes received, there are 130,095,497 votes in favour, representing 99.93% of present and voting shares, 95,309 against, 25,060 withheld. Resolution 8. Based on the votes received, there are 130,171,201 votes in favour, representing 100% of present and voting shares, 0 against, 44,665 withheld. Resolution 9. Based on the votes received, there are 104,622,514 votes in favour, representing 98.58% of present and voting shares, 1,511,490 against, 24,081,862 withheld. Resolution 10. Based on the votes received, there are 130,145,166 votes in favour, representing 99.96% of present and voting shares, 50,000 against, 20,700 withheld. Resolution 11. Based on the votes received, there are 128,637,280 votes in favour, representing 99.95% of present and voting shares, 58,586 against, 1,520,000 withheld. Resolution 12. Based on the votes received, there are 128,695,166 votes in favour, representing 100% of present and voting shares, none against, 1,520,700 withheld. And finally, Resolution 13. Based on the votes received, there are 130,166,610 votes in favour, representing 100% of present and voting shares, none against, 49,256 withheld. That's all from me. Thank you very much.
Thanks, Catherine. We've received another question, so I will address that. The or was there a weakness elsewhere in non-drilling revenue? So my response to that is that the MSA growth that we have forecast for 2022 is certainly, Chrysos is a very important factor in that, but it's not just growth from Chrysos, so I should stress that. However, if you're comparing Q1 2022 on Q4 2021, what that is ignoring is the seasonal impact, in that the headquarters for our lab business is British Columbia, and basically the core part of its business in that part of the world's under snow in Q1. So Q1 is always weaker for MSA labs. The other question that I've had is reference to myself, so I'll tackle it, running a separate investment fund that invests in similar companies. That is overseen by the board, as is any investments in any potential customers where there could be perceived to be a conflict of interest. That's fully disclosed and goes through a process with independent board process. So yes, the company ensures there is no conflict of interest there. That rounds out the questions that we've received today. So on that note, I'd like to thank everyone for dialing in and attending the AGM. We obviously look forward to another very strong year ahead. And on that note, I'll hand over to the moderator. Thank you.
That's fantastic. Thank you very much indeed, Jamie, Catherine, for updating attendees today. Can I please ask attendees not to close the session? To be automatically redirected to provide your feedback in order the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure is greatly valued by the company. On behalf of the Board of Capital Limited, we'd like to thank you for attending today's annual general meeting proceedings. Thank you very much and good morning.